Good morning, everybody. It's Tuesday, November 14th, and this is the AgYield War Room. My name is Dan Dempsey, and I'll be moderating today's session. As always, if you have any questions or comments, please leave those in the chat area, and we'll be sure to address those throughout the session. Real quick here, overnight markets had December corn up a quarter at 477.5. January beans were down 2 3/4 at 1379 3/4, and December Chicago wheat was up 2 at 581. We had some outside market data come out this morning with CPI data coming in just a little better than expected at 3.2%. That was the first time since July of 22 that prices didn't rise, consumer prices didn't rise month over month. One export sale announcement here this morning, 101,745 corn to Mexico for 23. And that'll lead us right into our first point here. I'll kick it over to Dustin. I thought you put a really nice write-up in the letter last night about the number of December puts that are in the money currently and where we're at market-wise. I just wanted to discuss what that means as we head into option expiration next week.
Yeah, thanks, Dan. The biggest thing, we saw, we put on Friday's letter first, and that's, when we're settling on contract lows at this time of year, within 2 weeks of option expiration day, I think a lot of the focus goes towards what are those options going to look like on November 24th when they expire. Being at contract lows, we had 209,000 puts that were in the money on that Friday's close. And so you have two things changing every day. Flat prices changing and open interest of these options are changing daily. And that's something that we're monitoring. But we had a pretty big move in beans yesterday. Corn followed suit. So beans were at their highest valuation to corn all marketing year, all season. And corn couldn't help itself and find some support behind it, especially as we're getting kind of the tail end of harvest here. But with that, Delta changes happened very quickly around option expiration day. So we went from 209,000 contracts that were in the money and only about 4,000 calls that were in the money. Puts versus calls were extraordinarily high. Now we've actually changed that to as of this morning's open interest report, this morning's price, we have only 153,000 puts that are in the money. Average strike is a 512 strike, and we have 21,000 calls that are now in the money. So that's a big shift, right? That's about 73,000 contracts that's shifting just through option expiration. Now, that's assuming, Delta changes at 100%. It's not changing at 100% yet. But, 73,000 contracts shifting. What are these option holders going to do is the question. If these are positions that are held by growers and they intend to take puts right into short futures and do exchanges with their delivery points, it might not necessarily be a friendly thing. But if option holders, typically the long option holders, didn't want to be short in the first place. So if they're seeing this and they say, well, I don't want to be short on November 24th, sell me out of those in the money puts that I own, that triggers a purchase from the market makers on the other end that might be hedging that with futures. So it could be that we tend to gravitate higher going into option expiration day if there's this kind of an outside long put option position still in place. That would be the kind of the natural movement over this week and next week if those growers or the long option holder rather didn't want to hold that position. The question is, how does that match up to first notice day? Because now we're talking about 1 billion bushels as of Friday. Now we're down to about 750 million bushels that are in the money, or even less than that, in the money put options versus calls. At some point, how many more bushels need to be marketed up against final first notice day expiration on basis only contracts? So yeah, it'll be a very interesting tug of war the next 2 weeks. It could be pretty volatile, but we'll be monitoring that daily, and I think this should be part of that call for the next 2 weeks.
Yeah, and Dustin, just to add to that too, it sounds like a lot of contracts. To your point, 150,000. But when you look at that compared to the crop size, it's what, 5%?
Right.
So it's relatively small, especially at this point of the year. So yeah, I think it can have. We talked about going into holiday markets yesterday, I think, and you can have these, really big moves around options expiration for notice day. And you hear a lot of rhetoric, every year, right? The funds are short 100,000, or they all sound like giant numbers. And you look at how big the corn crop is, it's relatively small, versus some positions that they have in, soft red wheat where it's multiples the size of a single crop. So yes, they do sound a lot. 1 billion bushels is a lot. They're short 750,000 bushels now, maybe in corn, maybe less after yesterday. Pretty small, big picture.
It is small, and I agree with that. I think that we've seen this obviously basis only phenomenon, right? Where you get spread weakness and flat price weakness in the 4 to 5 days leading up to this major, drop dead date where they all have to make a decision. So I think even though the positions might be small in comparison, it's just that they're all forced into this one window of time, right? Where they're all making, even basis only contracts. We could make that same argument because all of this is kind of in theory. It's like, what's the reason why we're seeing an outsized move going into these key dates? It could be just that too many market participants are all of a sudden hyper focused on making a decision at once.
Yep. Well, and sometimes you might see both happen, because you have an offset between where options expiration is and actual first notice day, right? So some people don't roll until the very end, right? So especially if they're friendly, or, obviously a lot of farmers that haven't sold anything and haven't done anything but a basis only is generally friendly. So we could see, a continued, liquidation going into options expiration, and then also see, kind of a big break right afterwards going into first notice day. Like that wouldn't surprise me either.
Yeah, we have 3 full days after that Friday option expiration. So yeah, it could be supported till then and then break in the 3 days following that for sure. So
yeah, and you get you get this mixed in with, the potential they continue to alter the time frame for these rains in Brazil. I mean, if it does come to fruition, they're calling for 2 to 4 inches in a pretty widespread area. I mean, that's just another element to throw into this thing, right? Coming into Thanksgiving.
Well, I guess I can take that. At the end of the day, we've talked about this. It's really early. Time of year where you generally make a bottom. People are getting excited. It's extremely early. I think, I was on, I think the same farmer's soybean field that was filmed on September 30th has been shown about 25,000 times on Twitter. Not dissimilar to what we see here. You'll see the same 3 cornfields shown in a, Northeast Iowa all summer about how bad the corn crop is. So you gotta be careful what you see out there. At the end of the day, it's early. Obviously, if this dry, hot pattern lasts for another month and a half, it's an issue. I think we might be getting a little ahead of ourselves, like trying to say that's not going to rain in a rainforest for the whole summers.
It's a tough bet.
Usually a losing bet. But at the end of the day, it still has to rain, right? So we have to see some kind of a pattern flip.
Sure. Yeah, I was looking, I saw an update from Oil World this morning, Justin, and I know that it's difficult talking about oil share a lot of times just because there's so many moving parts, but it looks like we could, or we've been talking for a while about picking that business up from South America. I mean, any thoughts on, now it's starting to capture more and more headlines?
Yeah, it's really interesting. I mean, we've been selling a lot of meal for quite a while now, so we've had a lot on the books. I think the trading community, realized we were going to have to pick up a lot of that business. Argentina, well documented drought last year, right? So do the math. That they're going to run out of crush supplies. They've been importing beans from Brazil to crush. So I mean, the interesting part of it was the speed of the move. Right before, we had first notice day off the September contract. And Cargill came and delivered a bunch of meal, right? So nobody wanted SEP meal, which is typically your tightest slot. Nobody wanted it. Cargill delivered it. Didn't have really good stoppers, which means not really good commercial buyers of it. And the second that was over, we exploded. And so I think there could be some out of position hedges that got caught off guard by how quick it got tight. That's what it feels like to me. It's such a dramatic move. At the same time, everyone knows the biodiesel story. It's a really, really powerful story long term, and probably even in the next 6 to 12 months. So I mean, we've been getting these NOPA crush numbers where we've had historically tight oil stocks, and they've done nothing but sell soybean oil and buy soybean meal. So, I think the story was so compelling that oil share would go to relatively high levels and stay there. I think I'm even on that page. So it's kind of the perfect mix of a big bear trap, in my opinion. Where too many people are leaning one side, too many big players leaning one way, and the market sniffed out some vulnerabilities, and I think that's what's going on here. And then throw that on to what if we don't rein in South America again, right? And I think that's what's driving the meal market. Ultimately, I think that's way overvalued, especially in the forward contracts. But for right now, it is what it is. Meals running wild. They're adding on huge long speculative bets. They've liquidated out of most, or maybe even net short now in soybean oil. So if anything, I think it's probably friendly soybeans here if they can keep meal anywhere near these levels, because oil probably undervalued. As we go forward here.
That's very good. Yesterday we saw that we're just about 88% or almost 90% completed for corn harvest, and beans are about 95%. So we're getting this thing to the house. With that, I'd like to shoot over to John Wiedemann here and just get some anecdotal, as we're completing harvest, some of what AgYield clients are saying as they're wrapping up, expectations versus what ended up going down for harvest.
Yeah, pleasantly surprised, Dan, especially yield wise in corn. We've talked to a lot of growers that have had record yields, but most growers we've talked to have wrapped up harvest and now post harvest field work, especially given the weather window we have this next week. So they're definitely hammering down. And bean yields were pretty solid as well, but they're just the corn yields have been through the roof. So
that's really good. Jason Kelly, northern Illinois, northwestern Illinois. What have you been hearing as we wrap up?
Yeah, kind of reiterate what Johnny said. Harvest is at the tail end, if not finished up. Same story, just excellent corn yields. Some guys even better than last year, which is hard to believe. How big of a crop we had last year. Beans variable, but still some really good bean yields as well. Getting field work done. If guys got this window after harvest where they can get anhydrous down, most guys do it. So all in all, really good crops in northern Illinois for sure.
That's good. One thing I wanted to note, we've got a cattle on feed report that's going to be out Friday. And I know Ryland has been looking pretty close at some LRP indicators, some values. So I think as we go in through the rest of the week, we'll get an update from Ryland. We got a couple minutes here before we go into the open. So just wanted to kick it over to the guys on any parting shots as we go into Tuesday and thoughts ahead of the day.
I did want to add one thing kind of to that conversation earlier about option expiration, first notice day. I want to put in the context of, what do you do with that information? I think you kind of get a plan together of, okay, if corn rallies, what's my move, right? Like you should be planning on putting some price targets in, making some cash sales. When everybody's getting out of their puts, look to be buying puts, right? Do the opposite of what the crowd's doing. Especially if beans rally, I think you're going to convince more farmers, instead of taking that put into a short future, I should just get out of it because obviously we put a low in. And usually going against the crowd, as far as kind of a trader would think, that's usually the right position to be in. So that's one thing.
If you think about it, like what caused the corn rally yesterday was completely led by beans to start. So I think that's could have been almost exactly what we saw yesterday.
Yeah.
So,
well, to that point, like let's say your average strike was what, 512, Dustin? That'd be almost a 50-cent rally from the low. Like those are rallies you have to sell when you have a 2.4 to 2.6 billion carry out. No matter what South America does, we have too many clients with record yields, and you start doing the math on those kind of prices. Like that's where you've got to lay into those kind of things. Look at opportunities for new crop. If you get a $5 D's 23, good chance you're getting a 530 or maybe even a 540 D's 24. Right? Those are where some of those strategies, whether they're premium strategies, I mean, you can call and talk about all different options out there to have working orders in, but that's where you might be able to leg into some of these really nice new crop prices. But you got to kind of think ahead and put those in, because you guys have seen how these markets are. These guys come in fast and furious and they can rally at 20, 30, 40 cents in a few days and then it's over. And before you know it, it's 20 cents off the high. So I think that's all real good advice.
Yeah, definitely, Justin. I mean, it falls along the AgYield mantra of proactive marketing versus reactive, right? It's understanding, where your margins lie within the matrix and figuring out with your consultants what's best to do. All right, guys, we just opened. We got corn up a quarter, 477.5, and January beans are up a couple, 1384.25. Wheat is up about 4. Anything else as we sign off here, guys? Are we good to go? All right, everybody. Everybody have a great day, and we look forward to talking to you tomorrow morning.
Yep.
Thanks, Dan.
Thanks, Dan.
Thanks, Dan.